Welcome back to the Pro Ticker Podcast. It's your Sunday edition, and we're covering all those financial headlines you might have missed.
That's right, we're doing a deep dive into the week's most interesting market trends.
And we're kicking things off with Barron's. They had a fascinating look at Gateway Investment Advisors' latest moves.
Yeah, their third quarter trades, right? Some interesting stuff there, especially in telecom.
Okay, so break it down for us. What's Gateway up to?
Well, they're doubling down on Verizon, which isn't too surprising on its own.
Makes sense. Solid company.
Right. But here's the thing, they're also decreasing their stake in AT&T.
Now, that's interesting. AT&T stock has been doing pretty well, hasn't it?
It has, up 31% in the first 9 months of 2024.
So you'd think they'd want to ride that wave a little longer,
You would, wouldn't you? Especially with that 5% dividend yield they're still offering.
even though they lost their, dividend aristocrat status.
Exactly. But hey, it's not the end of the world, right? Just means they haven't been consistently increasing dividends.
Right, right. For our listeners who are new to this, it just means a change in their dividend strategy, not necessarily a bad thing.
Exactly. But there's another piece to this puzzle, Verizon's big move.
Oh, you mean the Frontier Communications acquisition?
That's the one. $20 billion for a piece of the fiber internet pie.
Wow, they're really going all in on fiber.
Seems like Gateway's on board with that strategy, even with AT&T's tempting yield.
Fascinating. So they're betting big on the future of fiber optics. But wait, Barron said something about Gateway and the chip shortage too, right?
Oh yeah, they're playing both sides of the field there.
How so?
Buying more Intel stock, even with its, shall we say, less than stellar year.
Interesting.
And on the flip side, they're slashing their Micron holdings.
What? Even though Micron's CEO just sold a bunch of his own stock after a huge jump.
Yeah, after a 22% jump. Seems counterintuitive, right?
Totally. So what's the thinking there? Are they betting on a comeback for Intel?
Maybe. Or maybe they just see it as undervalued right now, especially with all the Qualcomm takeover rumors.
And with Micron, maybe they're just cashing in on the AI boom.
Could be. Their profits are definitely getting a boost from all things AI.
Makes sense. Take the win when you can get it, right? It's almost like they're playing chess with the market, trying to stay one step ahead.
It is a bit like that, isn't it? Anticipating the next move, looking for those hidden opportunities. And speaking of opportunities, did you see Bloomberg's piece on the Asian IPO market?
Oh, yeah. Things are about to get busy over there.
The busiest week for Asian IPOs in over 2 years, according to Bloomberg.
It's like everyone's trying to squeeze in before the U.S. election.
Right. Trying to capitalize on the current market or maybe worried about what comes next.
It's a high-stakes game of chicken for sure.
Yeah.
So who are the big players in this IPO frenzy?
Well, we've got Hyundai Motor India.
Big name.
We've got China Resources Beverage.
Interesting.
And even the Tokyo Metro is throwing its hat in the ring.
Wow. Quite a diverse lineup. What's the investor appetite looking like for these offerings?
It's about as diverse as the companies themselves, actually. You've got China Resources Beverage, for example. They had to close their books early.
Really? Why?
Overwhelming demand. Investors are clearly thirsty for a piece of that beverage giant.
Wow. But then you've got Hyundai Motor India. Not getting quite the same reception, huh?
Not quite. It's been a bit lukewarm, to be honest.
What's behind that, do you think? Is it Hyundai itself or is it something else?
I think it's more a reflection of the Indian auto industry as a whole right now. High inventory, slowing demand. It's making investors hesitant.
Yeah, even a big name like Hyundai can't escape those headwinds.
It just goes to show, even in a hot market, gotta look at the bigger picture. And speaking of things that are maybe not what they seem, Barron's had this piece on office REITs.
Office REITs, those are the companies that own office buildings, right?
Exactly, and they're having a moment.
Really? I gotta admit, that surprises me. With so many people still working from home, you'd think those office spaces would be ghost towns.
You would, wouldn't you? But get this. Barron's says they're on track for their best year since before the pandemic.
Wow. Now that is a twist. But how? How is that even possible with occupancy rates so low?
It's a bit of a head-scratcher, right? Occupancy rates are still hovering around 50%, but it seems like some REITs are bucking the trend.
So who are these miracle workers?
Barron's mentioned SL Green, Highwoods Properties, and Vornado Realty Trust specifically.
Interesting. So it sounds like it's not just about how much office space you have. It's about having the right office space.
Exactly.
Yeah.
Location, location, location. Even if companies are downsizing their overall footprint, they still want that prime address.
Makes sense. Got to keep up appearances, right?
And attract top talent. Can't forget about that, even if those employees aren't coming into the office every day.
It's like the office is becoming more of a status symbol than a place where work actually gets done.
Maybe.
Yeah.
But hey, whatever works, right? Barron's even had this quote from Jeffrey Kolich. He's a big name in REIT investing, and he's particularly bullish on Vornado.
Vornado, what do they have that's so special?
Well, they're laser focused on those high-end properties, the ones in the best locations. They're betting that even in a world of remote work, those spaces will always be in demand.
It's a bold strategy, that's for sure. I guess time will tell if it pays off, but it's a good reminder that sometimes the old rules still apply, even in a new world.
Right. And speaking of things that are always in demand, let's talk about gold.
Ah, gold, the classic safe haven.
Except this safe haven is having a moment in the spotlight. The Wall Street Journal says gold is up for 6 weeks straight.
6 weeks. That's impressive even for gold. What's driving that? Is it just election jitters?
That's definitely part of it. When investors get nervous, they run to gold. It's like their security blanket.
Makes sense. But it can't just be the election, can it?
Nope, there's more to it. Gold is also seen as a hedge against inflation, and with all this talk about economic uncertainty, well, investors are looking for something stable.
So it's a perfect storm for gold right now. Fear, uncertainty, the works.
It really is. And, it's not just about traditional assets. The Wall Street Journal had this whole thing about investors using some unusual indicators to bet on the election.
Oh, like what?
Well, DJT, for example.
DJT. You mean Trump media?
The one and only. It seems its stock price is basically moving in lockstep with Trump's odds in the betting markets.
Wow. So people are literally using it as a proxy for a Trump victory.
Pretty much. Hoping to cash in a few wins, I guess.
Talk about a risky bet.
Definitely not for the faint of heart. But hey, some people are looking for those quick wins, right? Others are more interested in stability, especially with the election looming. The Wall Street Journal talked about UBS, the Swiss bank. They had some interesting recommendations for what they call election agnostic investments.
Election agnostic. I like the sound of that. What are those?
Basically, investments that are likely to do well no matter who wins.
So kind of like a hedge against the election itself.
Exactly. You're building a portfolio that can withstand the political winds, so to speak. And UBS is saying utilities and financials are the way to go.
Utilities, I get. People need power, no matter who's in office. But why financials?
Well, they're kind of playing both sides. If Harris wins, they're expecting continued economic growth, which is good for financials. But if Trump pulls it off and goes for deregulation, financials could benefit from that too.
So no matter what happens, they come out on top. Clever.
Right. It's all about finding those opportunities, even in uncertain times. And hey, it's not just domestic stuff either. UBS says hedge funds are shorting the yuan and the peso.
Really? Why those currencies specifically?
They're betting on a Trump win leading to trade disruptions, which could weaken those currencies.
Wow. That's like watching a global game of chess, isn't it?
It really is. Every move has consequences, and everyone's trying to anticipate what's next.
Well, I don't know about you, but my head is definitely spinning after all of that. It's amazing how much the markets react to, well, everything.
That's what makes it exciting, right? It's a constant flow of information and decisions. But I think the key takeaway here is to stay informed, stay focused, and don't let the noise drown out your own investment strategy.
Couldn't agree more. Thanks for diving into these headlines with me. It's been fascinating as always.
My pleasure. Until next week.